Ahoy there trader, today we have 15 stocks which are perfect for swing trading that look amazing in the chip stock and semiconductor sector. Let's go and take a look at the charts. Before we do, if you're not already familiar, there is currently an issue with the microchips and semiconductor sector. You can quite literally just go to Google and search the news items, you'll catch all about it. But this has just prompted me to investigate the sector further, so let's go and do that right now and look at the charts. First of all, I want to validate, is my style of trading good for this particular sector? I like to swing trade. I like to do a modern interpretation of classic swing trading. I've got a 200, a 50, and a 20 period moving average. And generally speaking, when price is above at least these bottom two moving averages, ideally all three moving averages, then I'm looking to initiate trades. And I've got an algorithm which helps me figure these things out as well. And it allows me to plug the rules that I use into an algorithm, which is it's just a fancy way of saying rules, and I can have it spit out a multi-decade report. So we're looking back over more than 20 years of data to say, is my preferred style of trading favorable for the sector? Again, I'm using the sector ETF as my weather vane for the just like I might use the S&P 500 for the index and the market as a whole, I'm going to use the ETF to measure the sector. So firstly, the sector, broadly speaking, is favorable for my style of trading, and even more so since, what have we got, 2016, it has been even more favorable. So I've got a good opportunity to take advantage even more by tying in the supply chain issue, because when you've got less of something, it should be worth more, and that's the broad logic, the supply and demand imbalance, and that could create some extra valuations into individual stocks. So what I want to do is just quickly go through some of the top performers and some of the sector stocks and see if there are opportunities to profit from what we're seeing at the moment. Now, again, just to date the video, if you're watching this at some point in the future, we're just sitting through on the broad market. Let me go to the S&P. So this is the S&P 500, just a measure of the market. We're just sitting through a broad market retracement. We've just seen a little over 10% retracement in a very short space of time at the beginning of 2022, right down to the 200 period moving average. We've been documenting this in real time, that this is just a corrective move, and we were looking to buy the dip. We've spoken about that on other videos. Back to the sector stocks, let's go back to the ETF. So we're seeing that same broad market retracement, this time a sector retracement right here, and this is going to create an opportunity. This is our buy the dip. And because it's a larger than normal retracement or correction, as it's greater than 10% in a short space of time, then we can presume that this is a good opportunity when we tie it in with a historically favorable style of trading or a trading strategy. So what we're trying to do is match the perfect strategy, the way that I like to trade, with ideal candidates in a sector that is potentially going to benefit. So there's a fundamental twist to my logic, and what my plan is to build out a portfolio of semiconductor stocks so that I can have sector exposure and potentially benefits throughout the first part and maybe all of 2022 while this fundamental edge just plays out. So let's just go through the stocks. Obviously, we've got the sector ETF is looking favorable. I've got the iShares ETF. Let's take a look at the Spider ETF. It's just a different brand name. It's just a lower value, but you can see there's a little bit more of a straight line to the equity curve there over a slightly lesser time period, but nonetheless it is still favorable. So again, I'm just kind of crossing the T's and dot the I's. I'm going to take a look at the semiconductor cash index. Again, I just want to cross the T's and dot the I's. And again, we can see that there is a recent and favorable outcome for the way that I like to trade. So this gives me confidence that I've got a good sector. There's different components to the cash is looking at 30 stocks, I believe, to represent the index it is weighted. The ETF and the different brand names are going to have different components that make up their sectors, and you can go and Google the components. So all I've done is I've have basically gone and searched for some of the popular names that I like to trade. They've got good volume, they've got stock options, because I like to trade stock options as an alternative to trading stock. It's a little bit more cost effective, and that's my preference, but you can do all of this with stock instead of stock options. Nonetheless, AMD sparked it. Let's take a look at AMD. Pre-market, we're already up. Again, we're going to be gapping higher to about $130 or somewhere around about there, and that potentially will be sparking the next leg of the movement. Usually post-earnings, price normally just meanders sideways for a day or two, so I wouldn't be surprised if we just paused briefly. For a swing trade opportunity, as I said earlier, I want price to be over the 200, which it is. Above the 50, which it isn't. As the 20 is below the 50, I'm just going to ignore that for the moment. So I need to see price go above about $140 before I'll initiate my trade on AMD, and that's what I'll be waiting for. And that next big movement could be sparked by this favorable earnings announcement. We've got sympathetic movements on NVIDIA, so we're seeing that up around about 5%. Again, we've got that same reaction here, that same response. So maybe we can get a little bit of a preemptive position on NVIDIA ahead of its earnings announcements, and just be a little bit more aggressive, especially giving the favorable results, and just have this reaction off the 200 period moving average as the kick start, or the kickboard if you like, to get positions. And again, being a little bit preemptive, because AMD seems to be the rising tide, and maybe that's going to give us the clue and the indication that some of these other stocks would be quite favorable as well. So NVIDIA's on my watch list. This also looks amazing on the weekly charts, so if you want to take a look at NVIDIA there, feel free. Just for speed, I'm going to not do that. So Marvel Tech is another one that I'm looking at. Again, hugely positive and steady equity curve over the last 22 years. We've got that same reaction off the 200 period moving average. Again, I might like to be a little bit more aggressive, and I can certainly put my, let's just do that actually. Let's just put my range rider line on. This is one of the tools that all my students have access to. So maybe as price goes back above this white line, I can be a little bit more aggressive. We've got a pattern, a V-shaped pattern that I like to see. So maybe I can get a little bit of a preemptive and more aggressive, rather than waiting for the usual classic interpretation. Why am I talking about being more aggressive? For all the reasons that I've mentioned. I've got a good sector, positive expectancy strategy, and a little bit of a fundamental twist, and expecting positive earnings with all the fundamental reasoning that we've got. So maybe I want to be a little bit more aggressive, find some earlier than usual entries, look for some pattern entries, rather than just wait for the mechanical setup. Just apply a little extra, or what I refer to as my secret blend of herbs and spices. So this looks like a great candidate. I'll be including this in my semiconductor portfolio. Again, we're going all through all the top performers. I've already done the hard work. We'll go through which ones I will be excluding and not looking at, and I'll show my reasoning in a moment. But Lam Research, again, another good candidate for me, has a positive expectancy. It is, for the moment, below its 200 period moving average, so I still want to apply some common sense. General rule of thumb, if it's above it, be bullish. If it's below it, be bearish. So there's a little bit of a conflict in my entry. So again, it's not too far away, but I can certainly wait for price to be back above the 200 before thinking about positioning. NXP Semiconductors, again, another, this time just 12 years of data. We've got, again, a very steady equity curve. It's just going back above its the 200 period moving average right there, so we can start thinking about new entry opportunities. AVGO, Broadcom Inc., not as favorable, but nonetheless mostly positive. We can see that the equity curve is starting to head back upwards. Again, we've got less data on this just because of the way that it was launched, but nonetheless we can see that same pattern just about to nip its 50 period moving average and go back above. It's so close I might as well wait for 600 to be breached before committing to a new trade. Micron Tech, Another stock that is showing a wonderfully steady equity curve. This is lovely to see by the dip. If you're looking at a chart, this is what we'd be looking for. It's a wonderfully steady equity curve that looks just like a wonderfully trending stock. Back at the 200 period moving average, I've got a lovely V-shaped pattern that I like to see there. I can get a price actioned entry if I want to be more aggressive. Again, the 50 period moving average is not too far away if I want to just stick to the more classic interpretation. If I want to stick to the classic interpretation of my trend trading strategy. So I'll be looking for positions actively on this. There's no reason not to. The data says, we'll put the trade on. I don't need to think about it a great deal. And, the sector as a whole should be positive. So Skyworks is showing a bearish direction for the moment. It's technically in a bearish trend, so I'd imagine that this would turn around. Again, we've got a lovely steady equity curve that says, when the average prices are pointing upwards and it starts moving high, then I can start thinking about a trade. So I'm just going to wait for this one. It's just in a holding pattern just because there's a conflict with the directional bias that I want for the sector versus what the strategy is saying. Currently, the strategy is bearish and I'm bullish on the sector, so it's just in a wait situation. As soon as it flips over, I will be looking for an entry opportunity. Now, good performers. The only reason why there's a separate between the exceptional and the good performers is, as you can see here, that it has been a little bit underwater, but we can see since, let me just get the date, since around 2012, the last 10 years, it has been positive. So a little bit of mixed results, but on the whole, it's quite positive. We can see that price is rallying, retracing back to the 200, the 50 period moving average, not too far away on KLAC or KLA Corp, and again approximately about $410 would be safe to wait. Again, I'm not going to get clever or fancy. We're looking for aggressive entries or adventurous entries, as I like to refer them. I'm just going to stick to the classic rules. We're going to wait for my line in the sand to be penetrated above the 50 period moving average, just because the performance is a little bit lesser on this. So I don't need to get greedy or creative on an entry because the data doesn't suggest to do it. It says it's a bit ropey, a bit patchy. Just wait for some certainty and confidence. The other stocks that we've just been through have that certainty and confidence. Similar deal here. We've got, it's been a little bit underwater, but lovely steady equity curve over the last 10 years. Chart a little bit messy here. Average prices are just bearish. Same as Skyworks, in that it's a little bit of a conflict in what the chart is doing and my bias on the sector. So my bias is bullish, and again, I'm just going to wait for those things to turn around. So again, I'm not going to be clever, creative, or adventurous. I'm just going to wait for probably a breakout, just because it looks so messy and horrible. So I'll have to wait and delay my choice to about $460. Again, assuming that the sector takes off, assuming that this goes with it, it should have no problem going to there and beyond. Let's check out Garmin, GRMN. A little bit ropey, as you can see here. This is why it's only a good performer and not a top performer, but nonetheless, steady equity curve over the last around about 10 years. There's a little bit of conflict in the direction on the chart again, so I just need to see price go above 150. So again, it's just going to be a delayed entry, just waiting for price to turn around. Keysight Tech, similar deal here. We've got a again, lack of data more than anything, only because it's been I've only got data going back to 2014. Nonetheless, buy the dip candidate. We're at the 200 period moving average. Just waiting for it to go back above. I can start looking for that V-shaped pattern, higher low essentially, or I can be a little bit more conservative, as I've not got the data to support being adventurous, and a move above 190 would just get me into a new trading opportunity. Last one on the good stocks list. Currently, we've got, again, you can see it's a little bit ropey before, but nonetheless, generally an upwardly inclining equity curve. Only since 2007 I've got the data, and we've got that by the currently below the 200 period moving average. Need to see it go back above. Again, I'm not going to get clever or creative because I've not got the data to say put the damn trade on. This is, you know what, just look for a conservative entry. Don't try and get clever or creative. I'll be waiting for my line in the sand to be breached. It's going to be about $155 before I'll be thinking about an entry here. Again, I can be adventurous and creative on my entries on the stocks that make sense for it to do so. They look amazing, my top performers. It justifies being adventurous. The good performers, I'm just going to follow the strategy rules. Don't need to be clever, don't need to be creative, just wait for the entry setup. There might be a little bit of a delay between me spotting the opportunity today and waiting for my entry condition. That's okay. The data suggests not to stress over the entry. So I've also got a donkey list. So there's some stocks that are probably just not worth looking at. So let's go and look at those. Again, they may provide great opportunities for all the fundamental reasoning that I've mentioned, but the data is saying, you know what, this stock is not a great candidate for the way that I like to trade using the rules that I outlined earlier. So maybe I just want to leave this alone for the moment and not worry about it. Those donkeys, as I call them, they may provide great opportunities. We can see that this stock is, technically it's positive. This is what I call a dinosaur back. I don't want to trade that. It might give me a little pocket of profit. I might be on the upswing of the strategy, but it's not something that I want to stress about because my strategy is not favorable, or this stock doesn't behave in a way that's conducive for my strategy. So let's leave it alone and not stress about it. So let's just worry about the best stocks, the best candidates. Let's trade the amazing candidates that have historically proven to be the top performers for my preferred style of trading. And now we've got a nice little sector portfolio that I can be involved in. I'm looking for stocks actively on these. As we saw, the top performers over here on the left are going to be first up. The good performers, there may be a little bit of a delay before I actually place them. Data suggests we can include them. And the donkeys, going to leave them alone because the strategy says, you know what, these are not fantastic performers. Don't worry about them. So with that said, that was my special report for 15 stocks which look great for the semiconductor sector. I'll be looking to swing trade them and get a little subsection of my own portfolio that benefits from the sector as a whole. Again, a quick way of doing it, if you don't want to worry about the individual stocks, is go and check out the ETF. That'll give you that exposure. And again, the ETF is a great performer. In the same way, we've got that pattern. We've got a lovely little V-shaped pattern there. It's about to fire off a price action entry. If you want to wait for a conservative entry, certainly above 520 on SOXX. And again, the ETF certainly worth giving you a little bit of more conservative exposure without worrying about the individual stock exposure. I'm going to be a little bit greedy because of the whole situation, the reasoning that I mentioned earlier. And again, I've got several candidates which look amazing and several stocks which I'm going to be avoiding like the plague because they're donkeys. So with that said, if you want a copy of this stock list, shoot me a message. The best thing to do is to send an email to phil@antivestor.com. You can follow the links to any of my emails if you get them or hit reply. I'll be happy to send you a copy of this stock list and maybe one or two others which catch my attention. And with all that being said, remember to like and subscribe if you want to get the updates. And if you've got any comments or feedback on this video, by all means, leave a comment below and I will speak to you very, very soon. Bye for now.